Yo, what's up, chat? I'm gonna be going over the overview for today. So, looking at the 15-minute chart, we had all of these stacked highs here, which made it incline that once we take out a high, this is low resistance liquidity, which is what we ended up doing over here because of news. We had this huge pump up from news at 5:30 in the morning today. And we ended up sweeping this buy side, which made me more short buys for intraday. So zooming into the 5-minute, we wanted to see what are we respecting, what are we disrespecting. At the time, it was 7 o'clock when I hopped on the chart, and I didn't really see anything at the time, so I was waiting for some sort of displacement, which is exactly what we got here. This is my model here. I would have entered here if we didn't have a retracement, but we didn't. We barely got to that fair value gap, and just ended up selling off to sell side, which was right here. So once we hit this, I was super cautious on taking any shorts, any longs. Honestly, I was like going back and forth with whether we're gonna go long or we're gonna go short. So I just wanted to see what structure was gonna show us. Remember, the wicks do the damage and the candles show the narrative. So we come up here. Looking at this does look like a long opportunity to participate in. I mean, this could have worked out if you enter here, got out at the top here. But I just wanted to see more structure. I wanted to see a sweep of liquidity and a market structure shift in any direction, which is what we got here. So we had this sweep of liquidity up top, also making a 15-minute fair value gap. There you go. So this was the end of the 15-minute fair value gap that I wanted to pay attention to. We came down, respected this fair value gap with an order block. So I wanted to see our reaction to that. If we can displace above another high, then that means we are long. We ended up not really displacing above this 15-minute fair value gap, and then we just sold all the way down to sell side. At this time, I was super cautious on taking a trade. I did not want to enter this trade just because of these wicks. So again, the wicks did the damage, and the candles did show the narrative. We ended up pumping right back up to buy side, sweep all those stops out, and then we had this pump down. This is where I did look to take my trade. This is where I took my trade. Just because we hit we hit buy side, and then we had this large displacement down, which is exactly what I look for. I entered off the fair value gap, pullback, and then target was this internal range. And that was my only trade today. That got me 2% on my account. So the rest of the time, we just watched it. There were more opportunities to catch these shorts, but I have already taken my one trade and it was profitable, so I told myself that I would not take any more trades. Let me take a look at the PM session. I mean, I was in class for the PM session, but the PM session low-key looked clean. So we have this buyback up. I believe, yeah, we are bouncing off of a 15-minute gap. So the target or the draw liquidity was very, very clear. It would have been this high here. We came back to that 15-minute gap, and we had this right here. This is an exact 2022 model. We have that sweep of liquidity, which would have been that 15-minute gap where we bounced off of. Let me just mark this out real quick. And then we had a clean market structure shift. So the market structure shift would be this high. It's always the high before we take out liquidity. I mean, this one would work, I mean, since it's relatively close, so it's pretty much the same thing, but yeah. We have sweep liquidity, market structure shift, and then wait for that fair value gap to form, which is exactly what we got here. Boom. And wait for that pullback. And the draw on liquidity would be buy side, which is exactly what we got here. So this was pretty clean in the PM session. But yeah, that's pretty much it for today. I'm gonna be vlogging again tomorrow, just like a little recap. But yeah, for now that will be it.